Welcome to Video 6 in the Money Education Financial Statement Preparation and Analysis Software Instructional Video Series. This video will cover how to build your base case and reviewing the Reports tab. When you log into the software, the first page you come to is the Manage Cases page. There you have the option of selecting an existing case or creating a new case. We're going to continue working with the example case that we've been working with in the previous videos. The software has saved the information that we entered in the Investments Planning tab, the Client Name and Income tab, the Assets and Savings tab, the Insurance tab, the Expenses and Liabilities tab, and the Estates tab. All of that information was entered in previous videos. Now that we've entered all of the data, we can go to the Reports tab so that we can compare the current year income statement and balance sheet with those in the textbooks. There may be a difference of $1 here or there due to rounding, but if you're off by more than that, you probably entered something incorrectly. Let's start by taking a look at the current year income statement. Again, our goal is to create an income statement that exactly matches the one that's in the textbook. If you find an error, you can fix it by going back to the appropriate tab and clicking on the entry, then making the edit and resaving it. So if you recall, when we entered the information in the Insurance tab, I intentionally entered the term insurance as a $1,000 premium every month instead of every year. So now I can identify on my current year income statement that I have overstated the premium for the term insurance policy because I'm comparing it to the one in the textbook, and I can see that my income statement shows $12,000 for the term insurance premium, and the one in the textbook only shows $1,000. So I can go back to the Insurance tab, open the record for the term insurance, correct the entry from monthly to annually, and click the Save button. Now when I go back to the Reports tab and I run my current year income statement, I will see that it has changed and now it exactly matches the one that's provided in the textbook. So I know that I have entered all of this correctly. We will do the same thing with the current year balance sheet. And this allows you to make sure that all of your initial data entry is correct. So you will compare your current year balance sheet with the one that's provided in the textbook. If you've entered everything correctly, you're on the right track. But we're not quite done yet. There are a couple of other things we want to take a look at on the Reports tab. So notice that there is also a button for ratios and recommendations. Let's take a look at the ratios for the current year. We'll want to check a few of the ratios, again, to make sure that you've entered data correctly. For example, I would suggest checking the emergency fund ratio. That's a good place to identify whether you entered expenses correctly as discretionary or non-discretionary. If the denominator of the emergency fund ratio is not what you expected to be, then you probably made a data entry error. You can also check the savings ratio on page 2. The first ratio at the top is a retirement savings ratio. You can check that to make sure that it includes both the client contributions to any retirement plans and any employer contributions to retirement savings. If that is not as expected, then you need to go back and edit the savings information on the Assets and Savings tab. One of the other things that you'll notice about the ratios is that the software is now starting to prepare you for making recommendations. So when we look at our ratios, let's go back and take a look at the emergency fund ratio, for example. You see that the software provides you with a benchmark ratio and also the client's calculated ratio. That gives you something to compare to base your recommendations. Just understand that the software benchmarks are static. So there could be situations where you need to override the recommendations from the software. For example, the clients might need an emergency fund ratio that's higher than 6 months because of their individual circumstances and financial situation. In that case, you would just override what the software is recommending and actually make the correct recommendation for your clients. Once we've spot checked a few of the ratios to ensure that we've entered everything correctly, we can also take a look at the three-panel approach based on the current information. Notice that there is a three-panel approach button on the Reports tab where we can look at the current year three-panel approach. And there's also a three-panel approach tab that we can click on to provide us a view of the same information. When you're looking at the three-panel approach, the first thing to understand is that you really need to run the ratios first. So before you click on the three-panel approach tab, go to the Reports tab and click on those current year ratios and recommendations. That will allow the software to calculate them and feed through to the three-panel approach. So if your three-panel approach is not showing anything in terms of the ratios, it's simply because you haven't clicked on that ratios button yet. Now, also keep in mind that the three-panel approach is the start of our recommendations. If you don't remember what the three-panel approach is, go back to your textbook and review Chapter 2. As with all software, you want to review the outputs to ensure that they make sense. Improper entry will yield incorrect results, and you should be able to spot situations that look unrealistic, which would likely indicate that you made an error in your entries. The three-panel approach then is helpful for assisting us with the next step in the planning process, where we are analyzing strengths and weaknesses, which will lead us to recommendations to consider. Do note, however, that the targets on the three-panel approach are also static, so you may need to override the software recommendations based on your individual client situation. Once you've created a balance sheet and income statement that exactly match those in the text and checked your ratios to ensure that they're calculating as expected, you will have successfully entered the base case information. This concludes our look at building the base case. In the next set of videos in the series, we will review how to make recommendations in the software.